evaluate stocks and look at their fundamentals. Sometimes stocks are popular, but I want to make sure they're valuable. But I want to make sure they're valuable. If you look at the best companies on the stock market, the most valuable ones, all produce high free cash flow. High free cash flow. That's why I'm looking for high free cash flow. All the best investors
welcome to the live
depended
stream.
on free cash flow.
We're going to get started
and
in about 1
evaluating the
minute.
company's ability to generate free cash flow. A company is not the stock price, and the stock price is not the company. They're two different things. Two different things. The big cap stocks have taken the show, but are big cap stocks going to come back? Chinese stocks are exploding. The dragon has awakened in China. And could be the best trade we've seen in a while. AI hype is really interesting. AI is going to be interesting in the future, but is it really a business today? I'm going to pass on this stock. Just not enough discount, and I'm not really believing that they're going to grow as well as they should. Options can make your performance go a little higher every month and generate nice income. Listen to the great super investors. They are pretty generous with their knowledge and their wisdom. You just got to read their books and listen to their videos. Learn something new every month. In investing, you'll become a great investor. You'll build wealth. This is a buy stock. You're looking at a discounted stock, and it's unappreciated at this time. Don't forget about bonds. Bonds are a smooth, consistent way of earning a good return. And when stocks are really crashing, bonds stand up tall. All right, everybody, let's get started. Man, it was such an interesting morning for stocks. I got up this morning. I was enjoying my coffee, and I thought I wasn't sure what I was seeing, frankly, when I looked at the Asian stocks and I saw that China, the Shanghai Stock Exchange, was up 8%. I was like, okay, let me have some more coffee because that's a lot. And yeah, it's 8%. It's a pretty ridiculous amount. In the last 5 days, China has just been on a tear. This is the whole exchange. This is like the whole stock market in China. So needless to say, the biggest story that we've been dealing with in the past couple of weeks is the China story, combined with the U.S. Federal Reserve really relaxing the interest rates and economic data in the U.S. coming in favorable, positive, optimistic. Unemployment is not going up very quickly. In fact, it's going down a little bit. The inflation rate is going down. It's like, okay, let's not get overloaded with good news. The Chinese government, from what I'm seeing, is it's on a mission. It's on a mission to get the stock market or stocks that are in China to appreciate. They're on a mission to get their real estate market, which had been on in a recession, to begin to appreciate and grow. And the Chinese government has a lot of credibility in my mind. And the reason for it is that the biggest buyer of U.S. debt, these are the treasury bonds and bills that are issued out by the U.S. government, is China. So they have a war chest of resources that they could throw at their stock market if needed. I don't know if they're going to need it. China is also an economic engine to the world. In the U.S., you can't go into a mass retailer, without buying a Chinese product. It's like 70% of inventory is Chinese. And that's a good thing for China. It's a good thing for Americans too, because our purchasing power has been enhanced, improved, because products are made very efficiently in China. So the long and the short of it is, it's pretty darn exciting to see an exchange just take off like that. Now, I've been investing in China, at least in Alibaba, for a while, and I've been monitoring China for a long time. And I would say 15 years ago, those who invested in China, it was like investing in startups that really worked and they made a lot of money. And 2021 is when Chinese stocks began to really, fall off a cliff, so to speak. If you look at the Shanghai exchange, in 2021, they were really riding high, and the whole exchange came down hard. The whole exchange was down 27%, while the US exchange has been really ramping up. I think the NASDAQ is up like 70 some odd percent. If you look at individual stocks, and I'll look at BABA since that's a stock that I own and I do a lot of research on. Alibaba was pretty much left for dead. It is uninvestable, terrible company. Why would anybody ever buy Alibaba? Let's discount it by 78%, which is ridiculous. Alibaba continued to grow. They continue to get more customers. They now are doing more business in the US directly on the Alibaba website. So it's interesting to see how irrational the market gets in both directions, right? We know irrational exuberance as it goes up, but this is irrational pessimism on the way down, of thinking that Chinese stocks are just worthless. In the last year, Alibaba started to work. It's up 24%, but you could see that, man, if you bought shares in April, you'd be up 55%. That's a pretty good rate of return. And you see this move, holy smokes. Now, you might think to yourself, this is unsustainable. That's a natural thought. Yes, except that the stock was trading at over $300 a share. That's, 3 years ago. Now, is the company smaller than it was 3 years ago? No, it's actually bigger. Are they producing less free cash flow? No, that's not the case. They actually have more cash, and they bought back shares in that time. So there's fewer shares outstanding for Alibaba. So fundamentally, let's just say they only recover half of the value they once were. And they go up to $200 per share. The investors doubled their money. I mean, Chinese stocks make a lot of sense. And I'm glad I'm in Alibaba. The toughest part right now of this China trade is, how do you buy in? You have this elevator going up, and you got to jump into the elevator while it's moving, which is a little scary. But I'm going to go for it today. I'm going to buy into the iShares China Large Cap ETF. I think buying an ETF is probably a good move for me. I already own BABA. I might buy more shares of BABA, but I think step one is buying into this ETF. This ETF is large caps in China. It covers Alibaba as well as some of the well-known names. And I'm going to keep analyzing all the individual names and keep putting capital into China. I'm a dollar cost average investor. I don't jump in head first. I think other investors do. And if it works for them, that's great. I'm going to be kind of accelerated dollar cost averaging into China. Just too much information leads me to think, okay, China is going to start to work. And I think the word is out. And obviously this ETF's up. Alibaba is going to be up today. It's up 5%. The whole exchange in China is up 8%, which is quite incredible. So I know that China is going to have a holiday. I think they call it the Golden Week, where they celebrate for 7 days or so, and it starts tomorrow. And I'm not quite sure if they close the exchange for 7 days up until October 8th. Uh, we'll see. I'll check tomorrow and see if it's open. And then we'll see what it does next week. But most definitely, this has been the most interesting story to me that's happened, amongst other interesting storylines. Positive news in the U.S. around the economy, positive news on inflation, 50 basis point reduction. And you think about, I don't know that the U.S. it's going to be a competition between China and the U.S. to see who can get their economy going faster. I just think that when both economies are doing well, it just is good for both sides. I think if the U.S. economy is doing well, they're buying more products from China. If China's doing well, they're buying more products from the U.S. I think there could be a very large rotation of investing, of capital moving to China. That's another reason why I'm really focused in on this trade as being one of the biggest opportunities that's knocked on my door in a little while. Is if you follow the videos I've been making, I try to think a year ahead, what's going to work in 2025. And in 2025, I had kind of a short list of things that are going to work. I think the U.S. stock market is expensive. It's hard to find discounted stocks. It's most definitely easy to find great companies, but companies are not the stock price, and the stock price is not the company. You can have a wonderful business, awesome company, great employees, great innovation, great products, but the stock price is wrong. It's way too expensive, or it's way too low priced. And I think for the U.S. stock market, it's becoming harder to find great companies that are discounted. I think companies receive really good valuations. The NASDAQ is up really, really nicely over the last 2 years. Now, when we look at China, geez, it looks like every company I analyze, I'm like, well, fundamentally, compared to my U.S. option, a China stock is severely discounted. I mean, we're not talking, oh, it's discounted by 5%. No, they're discounted by like 60%. And it's like, wow, that's never been the case of, well, the valuations don't work in China. No, the valuations have always been there, but the sentiment hasn't. And I think we may have kind of started a new run of sentiment around Chinese stocks. So let's see how that goes. But this is the story that I'm following closest, and I'm trying to make money over the next 2 years on China stocks. So good morning, everyone. So thanks so much for joining. Looks like we got a good number of people on. Tomas, good morning. Hopefully you are doing well. Shadow Guy, good morning. Thank you for the comment on the intro. I'd like to thank Dieter. I don't know if he's on, but he created that music, and I appreciate that very much. Doobie Trash, thanks for joining. Please suggest any stocks you want to take a look at, or any other topics that you want me to take on. Be glad to go over them. I've got a couple of stocks that I wanted to cover and kind of share with you and go over them. And I think I shared what my priority this week is, which is, try to jump into the China trade a little further. I own BABA. I'm glad I own BABA. But I'd like to, again, buy into FXI, and it's going to be interesting. I'll probably wait maybe an hour into trading and then probably buy $1,000 or $2,000 of FXI, and that'll be my starting position. And then I'll dollar cost average maybe up to $20,000 to $30,000. And then I want to find maybe another two Chinese stocks, individual stocks that I want to start buying into in the month of October. And I want to buy more shares of Alibaba. We'll see if the market makes it easy on me, which is, is there going to be any pullback in Chinese stocks? I hope so. But if not, I got to jump in because I just showed you graphs where these stocks are so beat up that there's a lot of upside potential that I want to take advantage of. So Tomas, you want to look at Weibo, WBO. Let's look at WBO, Weibo. Okay, cool. Glad to do it. Let's take a look at that one. So Weibo. So am I looking at the right one here? I don't know. Set there. Here we go. I think this one's it, right, Tomas? Weibo Corporation. Is it WB instead of WBO? So Weibo Corporation, through its subsidiaries, operates as a social media platform for people to create and discover, distribute content in China. All right, so that looks interesting. So this is a social media company. They're 2.4 billion. Revenue is 1.7 billion. See, if you look at like Facebook or Snapchat or any of those, you're buying the company at like 10 times revenue, if not a higher ratio. They're profitable. Okay. Look at this PE, 7.6. Forward, 5.5. Analysts think it's fairly priced. Okay. So let me take a look at their website just to get my head around what they do. So it's probably going to be in Chinese. Hopefully I can translate it. Okay, so yeah, let's see. All right, cool. So this is what we're looking at. We're looking at a social app made for Chinese. There's more people in China than there is in the US. I believe it's the highest populated country in the world. And a lot of people to get on social. All right, cool. So it's another Facebook-like company. Looks good. So just a quick news. See, Weibo at half book value, this stock could easily double. I bet you this report is looking brilliant. Seeking Alpha, this guy's looking brilliant. He's like, see, I told you guys. I told you this one was going to start to work. So over the last year, it's down 18%, but you see the 30 days probably telling us more of the story now. It's up almost 29% over the last 30 days, and it's really over the last 10 days that it's really rocked up. So let's take a look at their financials. Appreciate you bringing this one up because I'm looking at the biggest companies in China, and I'm kind of working down. And this one's looking good. This might be on my list to consider to buy. So let's take a look. So operating revenue, there is a little concern here, which is why is your revenue going down? And the reason it's a concern to me is in social, right? Is there another app that's taken over? So that's a homework item is why is their revenue going down? Is, potentially, I know that Tencent might operate a competing product. Who competes against these guys? So, all right, enough of me trying to figure it out. Let's ask Meta AI. All right, Meta, give us the answer. Right now, 20 GPUs are working on it, and we just spent like $20 of energy getting this answer. That's all a joke. All right, so they're competing against Tencent, I'm familiar with Tencent, very large, powerful company. NetEase, which is the second highest market cap of Chinese stocks. JD and Bilibili. Those are big, big companies. So I think, you know how I like to look at things qualitatively and also quantitatively, right? Quantitative being financials, hey, do they make money and so forth. Qualitative, what's the competitive landscape, right? So the homework is Tencent taking over their market share? Is, NetEase taking over their market share? Because if that's the case, there's a reason why the PE is so low. There's a reason why this thing's being sold at a super discount. Is because they're losing their market share, and that's bad. That's really bad, uninvestable to me. So that's the homework: is take a look at these companies and make sure that you're not buying into a company that's getting smaller and smaller and smaller, less relevant, and will be forgotten at some point. If you look at the US for social, you have Snapchat has been around for a long time, and they haven't really done much. If you look at their market cap compared to Facebook, it's like, or Meta, it's not even comparable. Meta's taken off. It's worth over $1 trillion of value, while Snapchat's just kind of stayed somewhat near its valuation. It's had severe volatility. And it's because Meta's just out-operated them. Instagram was a great acquisition. It's taken a lot of eyeballs away from Snapchat. And then Snapchat is being kind of pressured, threatened by TikTok. TikTok is super, popular. I think Meta's adapted quite well to the TikTok, paradigm. So has YouTube, right? They're not as dominant as TikTok in short form videos, but they're doing quite well. So that's kind of like the thought around WB is get the qualitative understanding really well understood, because you don't want to buy into great fundamentals for a company that is on its way out. Okay. And that's the homework that I would leave you with. Let's continue on the fundamentals just to kind of finish that exercise. So revenue has been depleting. That's why I look at revenue, right? I'm always looking at revenue saying, if the company's doing great, I should be seeing green. Okay. And if people love their social app, they should be logging in and more users should be on it. That's the other thing you want to look at is how many users, what's their user counts, and go from there. The free cash flow looks good. Yeah, those cash flow levels, if this was a growing company, this would be easily worth 12 to 15 billion dollars. But it's not. It's actually a negative growth company. Balance sheet, they have, and this is in USD. Okay. So 3 billion, almost 3 billion in cash. And debt is about the same. So net zero debt, but cash is almost close to net zero when you take cash and debt and combine them together. So we are dealing with USD. Okay. And I wonder why my trailing 12 months isn't populating, but okay, free cash flow, yep, 636. So this is a really good opportunity, but it's an opportunity to discover more. It's not an opportunity to buy. For me, in my mind, I'm not ready to buy this stock because I need that big answer, which is, why is your revenue going down? You have really, really strong competitors. What I wouldn't want to do is buy into a company where their user counts and their relativity and their popularity continues to go down because some other app is just really getting all the mind share and all the attention. So this looks really interesting, but you got to study why the revenue is going down. Okay, so very good suggestion, Tomas. Good luck with that. If you get somewhere with why their revenue is going down and what their competitive perspective is, I'd love to hear about it. So I'm going to make myself a note to study competition and sales decline. All right, we're off to the races. Good one. Nice small cap and really interesting company. All right, cool. So this is like the Chinese Twitter, right? Okay, cool. Well, it's like the Chinese Twitter in two ways, right? Like Twitter, which is now X here, it's losing its touch, right? Or it's losing market share. Elon Musk took it over and then started doing a lot of things that rubbed users the wrong way. He thought he had more leverage. So Meta created Threads, and now Threads is really popular. So it's like, oh no, X just created a new company for Meta, which I think is kind of funny. And that's kind of like what's happening is Twitter is very copyable. It's easy to create a Twitter life experience. And I think X is realizing that, like, whoa, hey, people can easily migrate from here to Threads or from here to something else. All right. Till the end. There's also IQ. Is IQ a competitor to Weibo? I'll take a look. Yeah, till the end. I had CCL on my list that I was going to go to. So I'm going to go check it out. So, and then Falls Graves, Zim continues to move up. You regret not buying. I sold all my Zim shares. I sold at a profit, and I hope it continues to go up for all the other investors. But let's take a look at Zim. So we're going to look at Zim, and then we'll look at CCL. And we'll go from there. So Zim, so it's up another 5% today. Incredible. Over the 30-day, it is up nicely, 22%. It's up from $16 to $24 a share and over the course of 20 days. That's really good. And this stock, this stock has a lot of room to go up. We went over, how Baba was so drawn down. It was left for dead. This is the same story on Zim. And that's why I invested in the company. And I got a really nice return. It didn't take long. And great. Move on. The things I like about Zim is that it could go up a lot. But just realize you may stay in this, or I believe that I could have stayed too long in the stock. This stock can go up and it can go down rapidly. It's going up nicely, great. But we're like one causal factor away from it, either going sideways or going down. And I think it's going to be a bumpy ride. I like using Google to show this. So I'm going to go over to Google. I'm not discouraging anybody from investing in Zim. I invested in Zim, and I invested for a reason. I invested because I thought, hey, it's going to go up in value. Okay. And I was correct. And I made my money and I got out. But you see this for the last, call it since May. So let's call it 5 months. Look at that volatility. Okay. So I experienced that and I'm like, you know what? I made money. Right now it's doing great. I probably left a little money on the table. Okay. But I made money and I left the party. And I don't know if the party is going to keep going for a couple months, for 12 months. Now, if this party continues for more than 18 months, I would be surprised. I wouldn't be surprised if you deal with volatility. If it kind of goes up and then it comes back down. If it goes up and then it keeps coming back down. I would not be surprised of that. And what I really the stock market's expensive in my mind. So when I look at an investment right now, is I'm looking for investments that are going to double in the next 5 years. And I really want to know that I'm buying a quality business that's just going to keep going up in value. Zim, I think, is interesting, but it's not like a company that I could say is in the green. Going back to my competitive quadrants, Zim is nowhere near that. At best, it's a gray. Why? There's a lot of shipping companies. The shipping industry is not like you can keep competitors out. In fact, there's probably too many competitors, and when they put too many vessels in service, it creates too much supply and it brings down rates, and then everybody suffers. I think right now rates are lower than they were historically. Or actually, I'm sorry, they're much lower than they were a couple of years ago, which is why the stock price is down so much. But they're not the biggest in the space. There's other companies that are bigger. And if rates start going down, you're going to see this stock price just trade sideways and potentially lose value. So just be aware, how long do you want to stay at the party? I would encourage you to think about what's the exit strategy. This is not a stock that I believe we're going to wake up 10 years from now and it's going to be worth 5 times its value. I just don't believe that. I think it's going to trade sideways. This industry experienced something super special a couple of years ago. COVID caused big shutdowns in China, and those big shutdowns in China caused supply chain shortages. So when those shortages started, there was a shortage of product and there was excessive demand for shipping, and it created a scarcity in shipping, which created really high rates, which hadn't been seen. I don't know if they've seen them ever that high. So you were looking at a very rare occasion when the stock price is that high. So it's not like the case of Alibaba or Meta, where those companies were really sold off, but those were naturally just really valuable businesses. You're starting with a super valuable, very rare business that has competitive barriers against its competition. It operates an app that people want more of. They just want more of it. Zim is not in that space. So I would really encourage you to think about, what's my exit strategy? Am I good at 30? I had an exit strategy at $30 a share. And then I changed it because I began to think, okay, I'm having a great year with my portfolio. If the year ended right now, I'd be like, great year. 2024 was awesome. I achieved the return that I wanted. Back-to-back years have been phenomenal. Great. Let's move on to 25. Now, the year isn't over, but that's kind of what's in my head is, okay, how can I figure out 2025, 2026? I'm a long-term investor. And Zim just didn't fit into that criteria. And it was sold off on my, portfolio, but I continue to root for the company. So that's the challenge I leave you with, is think about what's your exit strategy. We're not going to hold stocks forever, right? Forever is a long time. We can hold stocks for 10 years, 20 years, 30 years. That's fine. But, stocks like this one, to me, in my mind, they're not a hold forever stock. They're a get in at the right time, because they are in the gray. Whenever I invest in the gray, have to be buying in at the right price. I think the pricing on Zim was excellent. And I need to know that the industry they operate in has some things going for it, has some tailwinds. Something's going to work in that industry to help the companies that operate in that industry. And I felt that the market had underestimated how shipping rates were going to be. It was literally, the market was saying shipping rates are going to be 0. And it's like, that's irrational. They're going to have a reasonable shipping rate, which ended up being the case. I did the numbers, through my analysis, and hey, great. I got there. I determined I wanted to get out. I got out. I think other investors will make their own decisions, obviously. And that's the word that I would leave you with. So thanks for bringing it up. If it makes you feel better, you still own Zim. You're still making money. I don't own Zim. I haven't owned it in 3 weeks or so. So I left some money on the table, but I'm not. Oh, well, I've made money elsewhere. All right. So Tomas, by the way, Trinium went up. Whoa, materials. That's another report that I noticed amongst the big. Hold on a second. Sometimes I need more coffee. So it's TX. Sorry, it's early in my day, everybody. I still haven't finished my coffee, so maybe I should take another sip. So it went up 13% since I mentioned it. Yeah. So materials have been working. Material stocks, I think the way materials work is it's almost like the year before the economy is going to be good, materials start to work. And we're hearing all this positive economic news in the US, unemployment isn't all that bad. Growth isn't great, but they're going to start lowering interest rates, which may stimulate more growth. In China, they're growing at 5%. That's really good. So I saw on a report that iron ore went up a lot. What is Sunday for me, but everything in Asia is like half a day ahead. So they were already trading commodities in Asia, and iron ore was up. Copper was up a little bit, but iron ore was the key that I saw. And iron ore, steel is Ternium's business, right? So keep an eye on materials. I think materials tend to play the economy we're going to have a year from now, 2 years from now. And if you get in at the right time, you can really ride that elevator up. And again, have a good exit strategy. It's a lot easier to figure out when I want to buy a stock. It's a lot harder to figure out when I'm going to sell a stock, especially a big winner. You're like, oh man, I love seeing it in my portfolio. Yeah, it is fun looking at it and going, oh man, look at that. I got that one right. But if you stay at the party too long, sometimes you see something that looks great, just drop in value. I experienced that with Pfizer. Man, at one point, I doubled my money, boom, like that. And then it fell off the cliff and went over the waterfall. And I ended up, taking a massive haircut on Pfizer. So keep that in mind. You got to understand what's your exit strategy. And your exit strategy may be like, look, if fundamentally, I love this business, like I'm a believer in Meta, but if their story changed, if they decided, hey, you know what, we're going to start manufacturing home appliances, I'd be like, whoa, what the heck are you guys doing? Why would you do that? You're a social app company. No, we want these appliances and, just some crazy nonsense. And they started operating poorly. That would change my exit strategy. I would probably want to exit that stock. I'm sure the exit door would be flooded with people trying to get out of the stock if they started making home appliances. Of course, that's a make-believe example, but it could be that, hey, I'm a long-term holder, but I'm going to study their story. I'm going to study the stock twice a quarter. And if fundamentally they change, then I have to revisit what is my exit strategy. It may be as you buy the stock, you're like, look, I know this company is not like going to be awesome for 10 years. It's going to be good for 2 years. But the stock price is really depleted. I believe that industry is going to really flourish for the next couple of years. I'm in and I'm out. My out price is going to be this unless the story changes. And then you're going to monitor it and manage that investment accordingly. All right, good stuff. Got a lot of things moving. Stock market has opened. In the US, we have the Dow is down. That's 30 big companies. The S&P is down a little bit. I'm going to call that flat. The NASDAQ is up a little bit. The Russell, small companies, is up. And the VIX is up a little bit. Oil prices had been going down, which is interesting. They were up this morning, which is good. we'll see where they end up. Okay, so Android PC, good morning. Thanks for joining. All right, let's take a look at, I think it's Carnival that announced their earnings. Trader Prad, what's up, man? I was ready to go to watch Trader Prad last night, but he couldn't make it, so I'm going to be ready to go to watch him tonight, 8 p.m. Eastern. And a lot of action going on, man. Trader Prad, what do you think of China? How are you making money in China stocks? Maybe that's a good topic for tonight. I want to hear what you got to say. So Carnival, down a little bit. They announced their earnings. We'll take a look at that in a second. Carnival has been really, let's look at that, man. Now, when COVID happened, this is kind of understandable, right? Is we need a social distance. And I think there was a cruise ship story that was horrible, right? They departed around the time when COVID started breaking out, and some people on the ship got COVID, and the ship was quarantined, and the ports didn't want them to stop in their ports. Like, no, you guys need to go away. And the crew on the ship just suffered so much. There's a documentary on it. That was a really tough story. So understandably, the market said, okay, cruise lines may not even exist. And they also had another really tough challenge, which is, so companies, they will incorporate wherever it's most favorable to them. And the cruise ship lines, due to tax favorability, they would incorporate like in Bermuda and places like that, because then they had very little tax to pay, right? Okay, congratulations, because they're out at sea, right? It's not like, hey, I'm sailing on the Pacific. Who's going to tax me? Nobody. You're in the middle of the Pacific. It's not like the US could say, hey, pay us some tax, or Japan could say, hey, pay us some tax. I know when they go to a port, they'll have to pay some fees to that port. But once they're out at sea and they're providing gambling and entertainment and all kinds of stuff, tax-free, because they were incorporated in Bermuda. Well, when COVID happened, the US did not help the cruise ship line like they helped the airline industry, because they're like, hey, tough luck, man. You guys don't pay any taxes. Why are we going to help you? And then they hire a lot of folks that are from around the world, which is great. But again, the US didn't, I don't think any country stepped up and helped the cruise ship business. They had to deal with COVID and the complete loss of revenue on their own, which made them very undesirable, because there was a very high chance they were going to go bankrupt. But they stayed in business. And more recently, the industry's bounced back. And now that people are, COVID's over and you can travel, people have traveled. Boy, people have traveled. And you can see that the stocks worked 32% for 1 year. Now, what's going on with the revenue, right? So what's my forecast of the cruise ship business for the next 5 years? I think it's going to be all right. I've never taken a cruise. I'd like to take one up to Alaska and see the glaciers and all that stuff. And I think as I get older, cruises become pretty cool. You got internet, you're being catered to 24/7, and you go to pretty cool destinations. I have friends that have taken riverboat cruises in Europe, and they tell me a lot of good things, that they really enjoyed that experience. And I have friends that have taken cruises up to the one to Alaska is that's a box that I got to check at some point. I just got to figure it out and see when my family is available to do that. So I think the business is going to be all right for the next 5 years. So let's take a look at their financials and see what's going on. All right, so CCL, Carnival. So just a quick, headline. So they outperformed the third quarter guide or outperformed third quarter guidance and then raises full year 2024 for the third time. Okay, cool. And I think, you know, I don't I don't have any economic, interest in stock analysis, but one thing I would like to tip my hat on is they do a nice job of bringing in data like almost real time because they already have the data probably for this earnings. Yep. Here's Q2, May 31st. So when we look at the trailing 12 months, it's including the earnings that were just released. So good job, stock analysis. If there's any viewers from stock analysis, great job. Operating revenue. Look at that revenue growth. Holy smokes. Of course, COVID did a job on them, right? They lost 73% of their revenue over the course of like a year. And then they lost another 65% the year after. So they went from being a $21 billion revenue business to less than $2 billion. Whew, they lost more than 90% of their revenue in 2 years. And then they're building it back. They're now bigger than they were pre-COVID. Good job. Good job, Carnival. Very good job. Did they pay a dividend? They don't pay a dividend yet. We're going to look at their balance sheet. That's going to be really important. If they took on a lot of debt, it may be a good story that they came back, but the balance sheet may scare me off. Okay, so we got revenue growth. Great job. Net income. Okay, they're profitable. Good job. Good job on that. All right, balance sheet. So they have $1.6 billion of cash and short-term investments and total debt of $30.6 billion. So you see that in 19 they had 11 billion and then they had to go borrow money. And I could imagine that they borrowed at very high rates because those that, lent them money were looking at a high risk company. It's like, well, are you guys going to make it? So they probably charged a pretty high interest rate. So if they're 30 billion in debt, what's their EBITDA? We want that to be less than EBITDA. They have to be able to pay off their debt in 3 years. $5.27. So this balance sheet scares me away. It would take them over 5 years to pay off their debt, probably more like 5.5 years. And that's a lot of debt. If they have any other trouble, this isn't going to be a bankruptcy risk. So that scares me off. I'm not an investor. Other people can invest their money the way they'd like, but the balance sheet's not good. The industry. Do I imagine I'm going to wake up 5 years from now and this is going to be worth twice as much? No. I think it's an interesting business. Hey, great. Good job, guys. But it's not an industry that, I think is going to be worth a whole lot more. As we look at free cash flow, so they are cash flowing quite well. You could see that they were burning cash big time for 3 years. That's where all the debt came in. They had to borrow money to survive. And now they're generating 1.6 billion. So this is an undesirable business to me. Other investors may feel otherwise. I would value the company at around 16 billion because it's an undesirable business to me. It's not a great business. And so I would think that it's overpriced and it's super risky with a bad balance sheet. So that's my opinion on Carnival. And I'm glad that they made it. It was tough to see that COVID just impacted companies. I mean, Carnival didn't do anything wrong. They were just operating their business. And then this pandemic happened. And this virus took over the world and crushed their business, and they had to borrow a bunch of money. And now I think the business is kind of tough. Sometimes in these industries, you see this in the airline industry, is you may see a new um, cruise ship business come out, and the big advantage they're going to have is they're going to have a clean balance sheet, and they could probably get new ships built, or um, buy some ships from some of these uh, cruise ship lines, and probably do quite well because they're going to have a big advantage. In the airline business, when JetBlue came out, they were new. They didn't have debt. They bought new planes. They had a big advantage because they weren't depreciating planes as quickly as other airlines. The maintenance cost was a lot lower. So that stock became really desirable. And I think the same can happen in this business. So I'm not an investor in cruise ship lines. It's not exactly like my zone of expertise, but I'm just kind of giving you some high levels that I know. All right, so that was an interesting stock. Glad to see. Tomorrow we're going to see Nike report. So I'm going to be all over that, but it's after trading ends at the end of the day. So I'll actually cover it on the live stream on Wednesday morning, and I'll probably record a video tomorrow late and release it tomorrow late on Nike, which is one of my investments. All right, so looking at the markets, the U.S. is Dow is down half a full percent. S&P is down 0.1. So it's kind of, whoa, Russell went negative on us. What's going on, Russell? Let's take a look at sectors. See how sectors are behaving. So right now, communication services, consumer staples, technology, consumer discretionary in the green. Materials is the worst off. Financials, energy's down. Utilities are down. Industrials are down. So interesting day. This is the last day in September. September is going to be a really good month, and from a performance standpoint for me, I thought when we started September that, we're due for a pretty nice, correction. And the first week of September, I was like, yeah, it kind of felt like we were going to have a nice correction. It started correcting, and then the market said, you know what? We changed our mind. The forces that make stocks go up or down said, no, we're going to rally 8.81%. And I'll take it, man. I went in, kind of realizing that, hey, we are nicely, at a good place, with good appreciation. If you look at the 1 year for the NASDAQ, it's up 36%. This is like Monopoly money. Like when you start playing Monopoly and everybody gets dealt out all their money. Hoo-hoo! That's kind of like 36%. That's awesome. But you've seen this volatility in the last couple months. I'm not the only one that's thinking, man, it's great, but is this sustainable? So finishing September way in the green, I'll take it, bank it. It's going to help me have another good year in 2024. I'm playing a little bit safe, trying to concentrate my portfolio. And I'm glad I was doing that because now I have cash to go into China. That's the reason I was trying to do that, is if you have a healthy pile of cash and the next opportunity knocks on your door, let me knock. Who is it? Opportunity. Boom. Buy some Chinese stocks. So I feel like, okay, great. I got some capital to deploy in China. I got enough capital to, invest 100 grand, maybe a little bit more into China over the next 6 to 8 months or so, buying into FXI ETF, buying some more shares in BABA, finding 1 or 2 more stocks to invest that I like in China, and start playing the China trade, because I think the China trade has a lot of longevity It's been down for so freaking long, man. I just, and if you view my videos on Baba, which I've been making videos on Baba for 3-4 years, you you sense the sentiment, or I really clearly explain that, you know, and I'll use Baba as the example because I know it's going to give me the chart that I'm looking for. I'm like, the market's crazy. The market is nuts. Baba's a bigger business. It's valuable. It's strategically located. It's all the above. Just investors didn't like Chinese stocks. That's the only reason it's down. Fundamentals are great. Cash flow is great. Their earnings, they report their financials very, very well. Better than most US companies, frankly. They give you more data on their business and how they're growing. They give you bad news. When something bad happens, they don't like hide it from investors. They tell you this is what's going on that's bad. This is what's going on that's good. So this company shows me that once sentiment changes, you have a massive fundamental correction that's coming to the upside, along with other stocks in China, because they've all been beat up. And you have the government that's going to fuel the beginning of a stock rally. So I'm really glad that, I started looking at the market and trying to thinking ahead a year to 2 years. How am I going to make money a year from now? How am I going to make money in 2 years? How can I continue to make money each year? Okay. That's my mindset. And looks like this China trade is going to be really interesting. When can you help us analyze stocks? Yeah, so very good question. I've done videos where I analyze financials, soup to nuts. But here's what I'm willing to offer. I was talking to another investor yesterday, and I wanted to host a workshop on like a Google Meets, which is video conferencing. And we can kind of go through kind of lessons, and maybe we go 90 minutes, 2 hours, however long you guys would want. But I'm going to open that up to members. So if you become a member, and it's the second level membership, you'll be invited to that type of session. And what we'll do is we'll take a company, and maybe the first time I could do kind of all the keystrokes, but if somebody's up for it, we'll let that person drive, and we'll let that person kind of do the keystrokes. Omar, if you'd be up for it, you can pick the stock, you can open up your screen, and we'll go through it so that you kind of feel like, hey, I had some folks around me that helped me kind of analyze the stock and look at the financials and read it and interpret it. But that's what's going to be available to members on the second tier. I think I called it advanced investor sponsor. So if you become a member at that level, I'm willing to host a call on a Google Meet session, and we'll go through soup to nuts. If it takes 2 hours, so be it. Because when you understand the financials, right? When we look at a company, like we've looked at a couple of businesses, we looked at that Chinese company that does its symbol WB, Weibo, their social network company or social app. So we understood it qualitatively, really important, super important. But then we get into the financials. The financials speak to you in very logical terms. Revenue's dropping. Okay, we got to analyze that. Free cash flow, we got to analyze that. Balance sheet, we got to analyze that. Because we can understand the story qualitatively, which is, okay, this is the story high level. Let's get into the financials and see that the financials, the strength of the company or the weakness of the company is revealed, and we understand it. So happy to do it on, member hosted session. Sign up. You guys tell me when you want to do it, and we'll go for it. And the other case study that we took through financials, right, is Carnival, right? We kind of looked at Carnival for the last 5 years, it is interesting, right, that COVID did that to that industry. And we looked at the financials, looked at the balance sheet. That's where the problem is. So, looking at financials is really important to an investor, understanding financials. Now, I got educated in accounting. So, at a young age, I was taught financials. And to graduate with an accounting degree in California and then go work in accounting, they made us do like, geez, how the sausage was made. We had to do financial statements, backwards and front. We had to do advanced accounting. So I operate with that type of education, and that is an advantage. But I would share with you that if you're good mathematically, you're going to be fine with financials. Once you get to know financials, it's not like anything difficult. And once you know how to interpret each section of the income statement, the balance sheet, statement of cash flows, every publicly traded company has to produce those. In the US, every quarter. In the UK, twice a year. Australia, twice a year. If you want to be listed on the New York Stock Exchange, you must provide those financials. And the financials have to conform to your industry's template. This is how financials are for, communication services companies. And so that's a really good topic. I'd love to host it. Let me know. Brandon V, good morning. So you want to talk a little snow. Snow's come up a couple of times in the live streams. And I think the conclusion. So what's going on with snow today? It's up a little bit. I think it's had a little bit of a tough time here to date. So qualitatively, okay, so one of the things that snow is dealing with is their customers. So snow is kind of in the data platform business, and what that means is they bring data in from, like, let's say AT&T, which is a customer and is really mad at snow. AT&T says, hey, we want to bring a bunch of data together, and then we want to analyze it to help us run our business. Great. Snow says, we're going to help you put it on one platform, bring data in, and then you can analyze it. And they're great. How much is it? $20 million. Okay, great. They sign and they provide it. The story was great. This is a newer company. I think they IPO'd recently in the last 5 years or 10 years, but they were growing quite nicely. So this looks good. But what is the big problem is that when you have this data, right, you're bringing in a lot of data. A lot of this data is really private. AT&T, I'm an AT&T customer. They have my first name, last name, social security number, home address, email. They got a lot of my data, and they got hacked. And it was revealed that they think that the hack happened through Snowflake. Oh no, what? So let me try to find the stories. And I got to go through some stories here. Give me a second. So competitive threats, and what's going on is, hang in there with me. The story was there last time we looked at it. See, this is 5 weeks ago. It happened. Okay, so. All right. So that's where you see how I was looking for everything. Let's see if Meta can help me here. All right. So Snowflake customers were indeed hacked. So AI to the rescue. So I was like searching and trying to get to data. So here's another example of how AI is going to help us. Cool. I thought that was fun. All right. Snowflake customers indeed hacked. Their data was compromised. The hackers targeted Snowflake's customer database instances, and they stole my data that AT&T had. Okay. Ticketmaster, that was the other hack. So if you bought tickets on Ticketmaster, I bought tickets on Ticketmaster. Okay. Well, your data is in the wrong hands. Santander Bank. That's the big problem with Snowflake. If you're going to go to customers and say, give me all your data and I'll put it on our platform, and then you have these kind of problems, it's okay. That's a big, giant freaking problem. And that's why their stock is suffering. Is qualitatively, I mean, if you look at the financials, you're like, what's the rub, right? Like, I think they IPO'd here in 2020 and they came out with a lot of fanfare. Of course, I don't invest in IPOs because they tend to go down a lot. And it doesn't matter who you are. IPOs tend to be big losers in the first year, if not the first couple of years. So that's the big rub. That's the big problem with Snowflake is markets lost confidence in them. Market cap's 38. The revenue's okay, 10 times revenue. Forward P is 172. I think they're going to have a hard time because of those problems they've had with hacks. I feel the same way about CrowdStrike. CrowdStrike kind of tried to, shake it off like, oh, sorry, but it was just like a quality control issue that we didn't check the code right. And we caused the biggest outage in the history of computing. Well, that's even more upsetting, which is, are you that poorly run that you cannot do proper quality control on your code before you unleash it on that many users? Who you guys are screwed up. I guess you don't understand the level of magnitude that you influence or touch. So I think Snowflake's gonna have problems because I think Microsoft, which is an involved company in that whole outage, is probably got a team, an army of engineers trying to figure out how do we create very like security software to get CrowdStrike out of our ecosystem. We cannot have an outage like that again, period. We cannot have customers like Delta that lost a lot of money because of that outage, period. It is now, I imagine, I don't know this for a fact. I'm just using logic. I have to imagine Microsoft's doing that now, saying we cannot leave security to a third party. Apple does not leave security to third parties. Apple, one of the things it does do quite well is it controls the entire stack of their technology. They control the device, the operating system, security, everything. And guess what? Apple is very secure. That big outage, it didn't happen on the Apple side. It happened on the Microsoft side. So those are the things happening. Qualitatively, Snowflake is dead on arrival for me, and I wouldn't touch that stock for my portfolio. There's a lot of other software companies that look fantastic. Software is a pretty good space, but it just isn't working. It's kind of a little bit of what China was dealing with, which is sentiment around software companies isn't very good. It's okay, but it's not good because the attention is being absorbed by everybody who's in AI. AI companies have really taken a lot of capital. All right, good session, everybody. Let's take a look at the market, and then we will shut this down. Oh, no. What's going on here? Come on, market. What's with this red day on a Monday? I'm all right. I'm ready for this. I've got a winning month. I'm not going to let a little bit of losses ruin a positive September. It's been an awesome September. I'm going to have a good day. I'm going to have a nice cup of coffee here. Enjoy my Monday. And hey, man, if stocks sell off, I'm good. I'll buy into that weakness. I'm good. So let's look at Asia. Man, what the heck? Come on, Asia. 8%. Ridiculous, man. Ridiculous. Let's look at our Chinese stocks here. See how they're doing. BABA up 3.3. NetEase up 3.2. JD up 5%. Baidu up almost 5%. Li Auto up 8%. Becky up 13.2%. Holy smokes. ZTO Express. This is ridiculous. NEO. Is my man Mike on? He's a NEO stockholder. He wants to recover some of the losses he has. Well, I think you recovered a pretty good amount today, buddy. Futu. Dude, this is ridiculous. Xpeng, 4.65%. Holy smokes. The dragon has awakened in China. This is a lot of money being made today. And I think this is really catching everybody's attention. And big investors are probably going to they're piling in to Chinese stocks. That's what's causing all this green. I think the word is out. Trader Prad. China, Numba Wong. I don't know what Numba is. Are you speaking Chinese to me? Or writing Chinese to me, excuse me. All right, man. So again, I'm going to have a nice Monday. I'm going to see how I can get into China and try to number one. Okay. Sounds good. China is number one. And we'll go from there. So that's it for today, guys. Everybody enjoy your week. Let's make some money and let's figure out what October is going to be. And everybody, thanks for joining. And I'll see you tomorrow, same time, same place. Have a good one.